Good morning, traders. Welcome to Thursday of this beautiful week. Make sure to swing over to ssftg.com/brief to grab your morning brief levels. Before we jump on in, as always, we need to check the news so we know what's going on and when, so that we're not taken by surprise by anything. Looking at the news calendar for today, we've got some large news at 8:30 with the initial jobless claims, forecasted 750,000. Previous was 730,000. We do also have tentative OPEC meetings going on for a while. That's going to be messing with crude for a little bit, especially after yesterday's inventory numbers coming out at 21 million. That's insane. 8:30 also has some non-farm productivity quarter over quarter. Those are the medium announcements. Unit labor cost quarter over quarter. The big non-farms are tomorrow. 10 o'clock factory orders for January are also at 10 o'clock, medium number. And then the next large one is Powell, Fed Chair Powell speaking at 12:05. So we do have some news for today, and with Powell speaking, that can definitely move things around. So we're going to want to keep our eyes on the calendar for today because there's definitely some catalysts. But with that out of the way, now we can jump into some charts for today, today being 3/4 of 2021. First up on the list, we've got the NASDAQ, which is really proving why it's so incredibly important to wait for those confirmed swings to break. They never actually broke the confirmed swing. Man, did they come close. Ended up with 3 lower highs and just a complete obliteration of the bulls. The one thing that I like to pay attention to when we have a big slide down like this is, are people stuck on the wrong side? Right? When the market's rallying higher, were sellers selling into this move? Was this move down nothing but profit taking, or are buyers trapped, or what's going on? And a lot of times we can see what's happening with volume. So if we look at this drive to the downside, starting from the top and then working your way all the way down to the lows, we can see that volume is decreasing. That gives us a clue that this is profit taking. So this doesn't suggest that traders were necessarily trapped, or if they were trapped, they had plenty of time to respond before the drop, which basically shows that they're not accumulating, or at least there's no accumulation yet. This is all profit taking. So until we see accumulation, there's not really going to be a reason to want to be a buyer on the lows. We've got some nice continuation to the downside, and sellers are definitely trying to keep this going. This could even potentially turn into a way stronger trend. But all things considered, we're at the bottom of a major wedge. We bounced off of that. There's a lot of support down here. Every time the market is making new lows, it's not really making them very big. Same thing over here. We're not making them very big. So this just appears to be a really wide trend working its way down. And, well, we're at the bottom of it. Chances are we're probably going to try to cycle back up. And being such a deep trend means that it's probably going to land somewhere closer to that 13,100 to 200. Then over on the S&P with a very similar situation. We've got some pretty heavy divergence off the lows from the MACD, but we failed the top of the highs, right? The wedge breakout above failed, and they got obliterated just like the NASDAQ. 3 lower highs. In this case, we've got 4. That 4th one was the attempt to reverse. Either way, we've got a really strong move to the downside, and same thing as the NASDAQ. It's at the bottom of support. It's going to be hard for it to want to keep going lower. Now, if we measure this from the top to the bottom, again, just to get an idea of what's going on here, to see, were traders stuck in this? Was this profit taking? What's happening in this area? This is a little bit of, it's a little bit more obvious than the NASDAQ, but we've got a very big chunk of profit taking on the way down. We've got the large accumulation. As it starts migrating lower, they begin taking profit. And as it migrates lower, they have less contracts to take profit on, so they take less and less and less volume. We're not seeing any accumulation on this move down, so that doesn't suggest that bulls are necessarily interested yet. That's not a bad thing, but it does mean that this has the likelihood of continuing to at least attempt to go down for now a little bit further. Maybe retest the lows of the wedge, get an extra confirmation, something along those lines. Then over on gold with a wedge that's kind of running out of steam a little bit. This wedge was initially a bit stronger to the downside, but it missed that low. Now it's shallowing in a little bit further, and so far it's missed that low. It still has time, but whenever you have a situation like that where in the underlying we're also seeing MACD divergences, there's a lot of other things suggesting that the lows are potentially closer than farther away. gives a pretty big clue that if the market starts reversing higher, starts taking out some of these previous major swings, that we could very easily have a trend reversal on our hands, or at least an attempt to try to rotate the market back up. One final clue that we need in order to see a bottom being put in is accumulation. So with this initial drive to the downside, if we look at the volume on that breakdown, not including this rally higher, just this big breakdown, and we can see kind of what the volume was doing inside of there. Okay, or not. Let's try that again. Ninja doesn't want to let me see it. All right, let's just go all the way to the end then and see what kind of volume we're getting. What the heck is going on? Ninja's not exactly acting right here. All right, let me bump this forward to just this most recent drive down then, see if that works. There we go. So one very obvious thing that's standing out here is that there is accumulation at hand. We have increasing volume on lower lows with a downweighted POC at 1709. 1709 at the moment has price above it. 1709 is also the major swing lows. There's a lot going on around the 1709 area, and it makes a lot of sense for accumulation buyers to be building a base around here. Looking for a pop back up. Well, realistically, where did the market have a lot of trouble before? We've got a lot of lack of volume right up in here, so the first objective would be getting back up towards the 1740s. From there, then, I wish I could draw the volume correctly, but something's messed up. I don't know what's going on. The next major objective visually is going to be around 65 at the top of that bear drop, and then from there, all the way back up to 1800 and maybe even further. But we're definitely seeing signs that the buyers are trying to put a bottom in. They just haven't had that higher high, higher low yet. Then over on crude oil with a, oh man, I don't even know what to call this thing. I mean, obviously it's a megaphone that's forming in the more recent term, but realistically, this thing is a mess. We had the numbers come out yesterday at a positive 21 million, which is way high. That's one of the highest numbers I've seen in a long time. Gasoline distillate was down a negative 13, so there is a little bit of a compensation, but even with that off, there's still like a 10 million difference easily. So the fact that it responded bullishly should suggest some pretty important information, right? Initially, that response was bearish. There was even a short opportunity inside of there for that quick little flush on the inventories. But right after the inventories, man, it hit the low and it just went screaming higher all the way back up to the wedge high where it did find some resistance, backed off. We've got kind of that higher low, lower high type area going on here, and then a lower high again, and collapse all the way down. So now we're dealing with a situation that's attempting to reverse back down and trying to get back towards the lows of the megaphone. The major objective, at least, that would be it. So where we stand right now on crude oil, man, this is a mess. It's a possible large range going on here that we're, maybe at the high of. It attempted to break out of the top and now it's failing lower. Really, to me, when I see this kind of stuff going on with this kind of major sideways action, I would rather wait for a bit more information. Right now, to me, it's kind of a range, buy low, sell high, I guess. And at the moment, it's just kind of in the middle. Switching gears over to the euro with the overall wedge that's going on. Attempted to break down through the downside here, but completely failed. And now they're rolling back to the highs with some divergences cutting across all of that attempt. So being the fact that it's already kind of migrated about halfway back after attempting to break down through the wedge lows, it's not necessarily to say that the buyers won't reattempt, but this is a fairly obvious entry defense play where buyers from earlier, that major jump to the upside, they just bought again. That's really all that happened. So realistically, if we can get a dip down into an L5, that would be just underneath the lows of where those stops would be. And along with that, that would be a negative 1.5 DP. So a negative 1.5 DP has a lot higher probability of holding the market back up than like a negative half or a negative 1. Those really don't help as much. They can be useful, but these negative 1.5s, negative 2s, or further, that's where things start getting really interesting. And a negative 2 is directly on top of that psych level at 1.2. Talk about stacking levels together. So the euro is definitely interesting for longs. It appears as though the sellers are failing to take it back down through the lows. Realistically, I think buyers will just be wanting to buy pullbacks to get as good a prices as they can. Then over on Bitcoin, we've got a nice continuation to the upside with somewhat of a spike in channel, although the spike portion of that is a little bit lackluster, at least for now. Maybe it ends up being a little bit more aggressive, but these pullbacks have been pretty 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 long lasting. If we look at the most recent value size pullbacks, we've got a 6.5-ish% dip. They blew through the highs, failed, pulled back. We're now sitting at about 7.75%. So obviously this is a dip back into value, but the one concern that I really have here going into Bitcoin is that when they tried to break above this high, it didn't just fail a little bit. It failed with a big twin reversal. That high isn't just the highs of the channel. That's the previous major swing, right? So in order to reverse a trend, what do we need? Well, we need to break a previous major swing. So we've got to break above that swing and then keep going. We broke above that swing, but the rejection was really fast. So with that dip down, this is where buyers have to prove it. If they're going to hold it, they're going to continue it back up on this higher low. So this is kind of their zone. This is where they're going to have to show up to the party if they're going to take it. And if they don't, we're probably going to see it slide a little bit lower back towards those 46,500s, maybe even back down to 45,000s to dig into some of these lower areas of interest, get buyers in at lower prices to reduce the risk, draw more attention. And then finally over on Ethereum with some pretty good movement overall. The big thing that's going on here is that we've got this nice bullish L2, and we did have kind of a weak break above the previous major swing, just like on Bitcoin. But the big difference here is that previous break, well, that weak break was here. It's already gone above that. It stayed above it. It pulled back with a higher low. I mean, this has a confirmed trend reversal. We've gotten the higher high, higher low. So buyers are going to be looking to continue this rally back to the upside and start breaking above some of these previous major swings. The last major swing is going to be way back here above 1700. So the bulls aren't necessarily out of the woods yet. They still have some work to do. There's still some falling resistance that maybe they want to come back down and test as support. So, again, the buyers don't have it complete and clear and out of the way here. The sellers could still definitely push this down. And given the weakness that we're seeing up here, it almost feels as though it's sort of likely. We've got the L2 coming in. We've got the channel lows. Everything is stacking up, unfortunately, a little bit later, if it would take some time. It's already at the L2, though. So what might be nice here is to see the market kind of ping around for a little bit, try to get an attempted rally up, and then go quick flush back and run. Right? That would be the kind of the jackpot scenario in order to get it back over here. But it is coming into the zone relatively early, and buyers are definitely trying to get it to go back to the upside, especially given the almost near to the tick response off of L2 in settlement. There's a lot of interest here. Alrighty, well, with that all out of the way, that will do it for today. Like we always say, stay safe out there, keep those stops in play, and let the winners run. Until the next time, we'll see y'all then. Thanks.